Welcome back, and you are with Commodity Champions. I also caught up with Daniel Yergin, who is Vice Chairman at IHS Markit, to find out about the crude oil prices outlook from him. Well, he says that the volatility in the prices will continue for the next couple of months. We can see a spike up in the crude oil prices, but he also expects then the supplies to start increasing and the prices for crude to find a range between $60 to $80 per barrel by the end of 2019.
Demand is going to weaken some with higher prices. People forget price really matters. Price goes down, demand goes up. Price goes up, demand. Now there's a lag factor to it. So I think the kind of, unless something really unexpected happens in the world, I think the maximum period of sort of uncertainty and high prices will be as we go into the end of this year and early next year. And then as demand goes down, as we come out of the winter and people start seeing this new U.S. supply coming on, that will bring down the price. I mean, I think you do this every week and you change your estimate. But I think, we show prices in the fourth quarter in a kind of orbit around $80, $85, maybe a little lower if we start to see slower demand. This all assumes that something else doesn't happen. Because the one thing that the market worries about, and that gets reflected in the price, when the spare capacity is there, that extra production, that's good news, and it's positive to have it, but it also sends a message that the spare capacity is getting smaller, and then if something else happens, the shock value, because as the Saudi Petroleum Minister Khalid Al-Falih said yesterday, this is the shock absorber of the system, and it's primarily in Saudi Arabia right now. I mean, we can see some additional production coming from Russia and other countries. So I think, we're now in mid-October, and I think next couple of months will be tight, and there will be uncertainty, and there will be a lot of volatility as we get close to that November 4th date. It's a big issue for India, but it's a big issue for the whole global market.
Global markets. So do I see a word of assurance there that we are not going to, even if we see a spike in crude oil prices, we won't stay there? And you are saying that 70s and 60s as we go ahead perhaps would be back. Yeah,
I mean, and maybe we'll be back talking about a $65 to $80 range, something like that. I mean, we see starting in September of 2019 to March of 2020, we see a lot of additional oil coming from the United States. It's all backed up right now. And so I think if the market has that in mind, it's, because the markets work on expectations, that will be a factor even earlier in 2019.
India contributes 20% to the global demand growth, is the word coming in from Keisuki Sadamori of International Energy Agency. He also predicts that by 2040, India will surpass China in the overall total demand growth, making India the biggest contributor then in the energy mix globally.
In the October's oil market report, we reduced our oil demand outlook a little bit, so reduced by about 0.1 million barrels per day. So our current number for the 2018 is 1.3 million barrels per day, and for next year it will be 1.4. So, of course, we are seeing the a bit of a slowdown in the economic activities, and also the concerns about the weaker exchange rate in emerging economies. So that's how we decided to review it and decided to lower the demand number a little bit. Yeah.
Even with this number, how do you see India? Do you also expect Indian demand to go down? Do you see the demand elastic enough to react to the global concerns and the prices?
I think we need to see what will actually happen. But as we observe, India is already the global leader of oil demand growth. At this moment, vast majority of demand is coming from this Asian region, and India is a big player in this. So roughly speaking, India contributes around 20% of the entire global oil demand growth. So far we see that that pace is continuing. But with this kind of a difficult time ahead, So I think that we need to see what will happen in the coming months.
What is the kind of mix that you see India importing? Because as of now, of course, crude oil is high. We also are looking at gas, LNG, etc. But with this whole conversation around biofuels, bioenergy, hybrids, do you see India actually making a lot of progress in those sectors?
I think so. And because of this very rapid growth of the Indian energy demand as a whole, and by 2040, India will be the largest source of growth around the world, surpassing China. And so therefore, all fuel sources will have to grow in order to meet the increasing energy demand of India. So in that context, I think that it's really important, for instance, for the biofuel, bioenergy to grow. And that will surely help the Indian economy in terms of the oil security and also as an important domestic the resources.
What also is your sense on the prices going forward? Because they have been very volatile. The last couple of years, of course, have closed on a positive. And this year, we've seen, even as the crude oil prices are up between 25 to 28%. What is the sense, really, as we get into the last quarter of this year and 2019?
So overall, our most recent oil market report's view is that now the oil market is adequately supplied.
Okay.
But this was made possible by the increased production from the producers around the world, not only from the non-OPEC like US and Canada, but also the countries, the OPEC countries like Saudi Arabia, but also Russia. They're all increased output. So that's how we see the adequately supplied market. But that also means that the spare capacity cushion is lean, became smaller. And also we need to see what will happen to the supply in the coming months. Venezuelan production is going down, keep going down, and also we'll see the US sanctions against the Iranian exports to actually start in November. So in that respect, there are some risks in the coming months for the tighter market. So that's how we will need to monitor the market closely.
Well, that, of course, was a view from the International Energy Agency on their world demand outlook for 2018 and 2019. But we also spoke to Scott Sheffield of Pioneer Resources, and he says that going forward, US is going to be the reliable exporter to India and the rest of the world. He also said that there is a lot that the Indian companies can learn from the US shale gas companies, and he also said that they are looking to divest their partnership with Reliance going forward, as Reliance is looking to invest into the Indian oil space.
Our partnership with Reliance has been excellent. It's been going on for 7 years. We have both announced publicly that we are divesting for different reasons. We're divesting of our partnership interest because we have too much in the Permian to invest, the Permian Basin. It has better returns than the Eagle Ford, and I think they're divesting because they're investing more and more capital in India. Both in the downstream and also in telecommunications. But it's been excellent. Most of the U.S. shale plays started with foreign investment from companies all around the world, whether it's from India, from China, from Europe. But that's how the U.S. shale, because we needed lots of capital, the independence in the U.S. And so initially all the joint ventures were done with foreign companies coming in.
What is that India can stand to learn from the U.S. shale boom that we saw?
Yes, I'll talk mostly about one of the biggest risks on U.S. shale that we had to solve was water. Secondly, you have to open up, you have to deregulate the industry and allow them just to, we're regulated in the U.S. by our states. And so I think India is going through that, and the Prime Minister has done a good job of deregulating, allowing the industry to move forward quickly.
How do you see, in that sense, U.S. as a partner to India, as in sense of exports to India now? For instance,
Pioneer was just contacted recently for us to be able to export our first cargo of crude oil to India. So they are taking U.S. crude. It is light, sweet crude. It does fit into all the refineries, and especially with the Iranian sanctions coming up in the first week in November, that U.S. will be a long-term, reliable partner. U.S. production is already at over 11 million barrels a day, come up from 5 million barrels a day, and 7.5 million is shale. and that's projected to get on up to 17 million barrels a day. So U.S. is now the largest producer of oil in the world and will be the largest producer for the next 20, 30, 40 years.
Now, alternative energy also has been a big focus in the forum, as you have the crude oil prices trading volatile and high, and with the growing demand, alternative fuels or energy perhaps could be an answer. I caught up with Dev Sanyal of BP, who said that alternative fuels in Indian markets have made good progress, and especially with the growing needs in India in energy sector, alternative fuels is something that also need to be took into quite consideration.
India is just doing a lot more in this space, and I think the level of innovation, the cycle time in terms of technology improvements, the application of digital, and frankly changing consumer patterns as a result of the way we are actually thinking about energy moving forward is, I think, essential. When you take a step back, India needs a lot more energy, 165% more energy. Compare that over the next 20 years. Compare that to China. It's around 61%. Compare that to Brazil, it's around 40%. Compare that to Russia, it's 8% growth. So India is growing very fast. We think that over the course of the next decade, the growth rate in India will outstrip China in terms of energy demand. So I think what India is doing is reimagining the world of energy in some respects. And renewables alongside gas is going to be incredibly important as we look at the future in terms of the energy mix.
What is the number right now that we are working with? I understand it's quite minuscule when you look at a comparison to oil imports and the kind of consumption that there is. But with the work that is being done, what is the pace, and how soon do you see we actually making a meaningful number here?
I think when you look at the overall mix from 175 gigawatts by 2022, it's been now actually increased to 225. That tells you there's a massive shift that's taking place. I think the key is going to be, how does India continue to make progress in that, but also leverage the gas economy, because ultimately renewables, the challenge is when the sun is shining, when the wind is blowing, it's great. When it's not, what do you do? Now, we are seeing a lot of improvements in storage solutions. The fact of the matter is we don't have a large-scale storage solution that can actually be the perfect complement to renewables. So gas, therefore, is very important. But at 175 or 225 gigawatts over the course of the next few years, that's a massive improvement, far outstripping what we're seeing anywhere else in the world. But of course, India just needs a lot more energy because India is going to become a lot more prosperous. And that's actually a good thing.
And with that, it's a wrap-up of this edition of Commodity Champions and from CeraWeek as well. But stay tuned as we continue to get you big voices on energy over the course of this week, only on CNBC TV 18.